An upside for corn in August. Here to weigh in on that is Mike Zuzolo, president of Global Commodity Analytics, and he is always weighing on also the macroeconomic side for farmers. On Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. Mike, how are you today?
Doing well, Luis. A lot of rain in parts of the Corn Belt this past week again. Some of my clients are now talking about record yields. However, the Iowa, #1 growing state in the United States, gets drier and drier.
Why are you sustaining that there will be a corn upside in August?
Well, I think the conditions are ripe for that because we did not see follow through to the upside in the corn as we closed out this month of July. And with one more day of trade left, we instead have made new monthly lows, and that December corn futures has been able to go through its monthly low of 330. But that has been contrasted with another sizable purchase of corn by the Chinese on Thursday. Around 81 million bushels purchased by China in one fell swoop for new crop corn. We also saw the ethanol numbers and production click up again about 5% versus the prior week. And so now we're only down about 10% from where we were before the COVID hit. And I think probably the most important thing, Luis, is two things: the supply side and the wheat. The wheat market has been able to, I think, find that low that you and I have been talking about, and wheat does tend to lead the corn. If I throw on top of that the Argentine attaché for USDA taking their corn production in Argentina, maize down below the USDA's official number of 50 million tons and closer to my number of around 47.5 million tons. I think that because the last 5 years lead month corn has been able to go at least a little bit higher, if not substantially higher, the first 10 or 15 days of August, I want to give it a chance at this stage to try and do that because of these fundamentals. I think very bluntly, the trade has forgotten about the tight world stocks that we are running, stocks to use ratios at 5-year lows. And when I saw ADM's quarterly earnings be so much better than expected, and Bunge's quarterly earnings be so much better than expected, ADM CEO, in fact, said they're looking at a very bright demand base for the export market. So I think the demand low is in place. Whether we have it in August, I don't know, but history would suggest there's a good chance.
Yes, and what about the U.S. market? The Fed recently released new data and new analysis on the U.S. economy. How does that impact on U.S. corn and soybean markets?
Yeah, very important week this week. I think this is why the corn was barely able to go higher on the day on that Chinese news when those big exports came in, and the wheat actually was going lower on the day, was because we had the Federal Reserve come out on Wednesday afternoon. And Luis, they essentially said, we have no power at this point. And as one economist said in one of the newspapers that I thought was very well put, the Federal Reserve can get money out there, but it doesn't get it into the people's hands or the consumers' hands to spend it unless you're redoing a mortgage or refinancing something where you get a lower rate. And those times are not good right now for doing that. And so the Fed essentially handed the ball over to the governments and the legislative bodies of their respective government, in our case, the Congress. Well, that's not such a good thing to do right now because we're at a stalemate with this next stimulus bill, that next $1 trillion stimulus bill that's been made so much of in our press. It doesn't look like it's going to get done before we go on recess in the early middle part of August. I think that recess for Congress is right around the next USDA WASDE report. So you can kind of see the dovetailing of the macro and the micro here, and you can see what side the funds are on, especially after those crop conditions came out and we saw such a big increase in conditions, 3 points for both corn and beans versus the prior week, which surprised everybody.
Yes, and in addition to that, we can speak about South America, because Brazil, for the first time ever, I spoke yesterday with market analyst, and it's for the first time ever that forward sales of corn and soybeans are made 2 years ahead. And the Brazilian soybean exports continue to be strong, not only in grain, but also in soybean meal and soybean oil exports. Argentina's a cocoa plant in Argentina has closed recently due to COVID-19. So Brazil is also getting some of the exports that previously would come from Argentina.
Yeah, and I think you can add on top of that the fact that we did get confirmation that Brazil was the #3 buyer of our U.S. wheat on the weekly export sales, and it was a pretty healthy chunk of export sales to boot. And this is something that you had talked about probably 2 months ago now, about the Brazilians needing to import wheat, partly because of the Mercosur and partly because of their supply-demand fundamentals. And so that is happening. And as we've talked about, that is probably likely to continue to happen. Maybe not directly as much as we'd like, but certainly the competitiveness of South America is much reduced when it comes to the U.S. Being in kind of pole position for the exports at this point. And I think that's probably why ADM CEO said what he said, with the future looking pretty bright. And, you know, our corn price here on a national basis, DTN does a cash index for corn, beans, and wheat, and our DTN National Corn Index has fallen below $3 again, and that's very close to the mid 270s when we were at the pre-COVID or at the COVID peak as far as fear and that negative crude oil price. And I think that really blends into the idea, Luis, that we're only 2 or 3 cents away from the corn futures price being at the back to the pre-June acreage report levels. And so that says to me, that was when we were thinking the corn carryover was going to be 4 billion bushels potentially because of all these big acres. And so now that we're only a few cents away from it, the trade's priced into going into the August report, in my opinion, a very big carryover. So even if they get that, that's not going to be a bearish shock to the market, I don't think. And I think that raises the expectations that I may have for some short covering by the funds before that August report, especially if Iowa stays dry another week, because they are really in the heart of dough stage and getting their grain fill done in the corn. So another week or two, it'll probably be too late for rains to really help Iowa that much.
Now, I wonder, because both corn and soybeans are too expensive in Brazilian ports. Maybe not so expensive for the buyer, but the seller is happy considering the value of Brazil's real. But I always like to think about substitutes in the economy, either on the supply side or the demand side. Do you think there will be more demand for crops like sorghum or other substitutes that are cheaper to produce?
Yeah, what we've seen out of China recently is they have been reportedly buying some wheat from Russia. I think it gets to logistics and freight rates when it comes to whether you see many substitutes or you see some odd purchases being done. But it does kind of make me feel like that the demand side has woken up. And we got to remember that this could be in part due to the flooding in China, which is still a very big story. They're expected to get even bigger rains in the next few days and have even a bigger flood potential at that Three Gorges Dam here in the next week or so. So as far as substitutes with corn, I can't see anything being substituted for corn right now. It's so cheap compared to the other commodities, Luis. And that's one of the things that makes me feel good about the wheat market, the fact that the wheat market is so much more premium, $2 a bushel plus premium to the corn in the futures market. And I would also say our corn price at the Mercantile Exchange on the board is about 3 times less than the Dalian Exchange for the Chinese corn prices. So I got to think that corn probably has the best look to it when it comes to demand function. Wheat would follow, and then, yeah, maybe there'd be some sorghum, milo, sunflower seeds, something like that, that would be more logistically placed, that would be more of a freight issue to try and get a better price.
And we are less than about 3 months away from the U.S. election. How is that having an effect on farmers, and how do you think that would impact the value of the U.S. dollar?
Well, I'll take the last question first. The big thing that I've noticed, why would we, with a 33% negative GDP here in the United States, why would we be seeing gold make a record high price? There's certainly not inflation pressure from strong aggregate demand. Well, I think a lot of it goes back to the COVID, and I think a lot of it goes back to the elections. I believe that we're at a record high price because gold is being a safe haven in case the vaccine doesn't work this fall or early next winter, and in case the U.S. administration flips and we see Vice President Biden win. I think that would be the confirmation to the gold bug and the gold bull that he was right. If we do see Biden win, though, I would expect the dollar to recover pretty rapidly and gold to have made a high unless COVID worsens. I think that's the hedge that you have to watch for, is that COVID kind of rules everything right now in the long term. And I think that's why gold has had such a good run and a record run to it. And we're getting a pullback in the silver market right now, Luis, and this is probably a dip to buy, in my opinion, depending on how much farther we can go down. If we could get back to about $20 an ounce, I think that would be a price level that if you missed the first move up, this might be a place to step in and get a little bit on the long side of the silver market in case gold does continue higher because COVID worsens as we get into the election time period. As far as the farmers go, U.S. farmers are fairly happy with President Trump with those direct payments, but they also realize that there's not a lot of money left over to be able to get much more. So I'm not sure the U.S. farmer really sees the positives and negatives to which candidate wins, except that they hear loud and clear that Vice President Biden is very green energy and probably will be attacking crude oil and fossil fuels. And that's not going to be good for ethanol and biodiesel as it's set up right now.
I have heard that some farmers have complained that these payments have slowed down in some cases. And what's your outlook for profitability in the coming months?
Profitability, yeah, I think the profitability in the soybeans is what I continue to be most frustrated with, because we're very close to being profitable up here in the United States, but we just can't seem to get close to that $9.50 a bushel level on the board price, and then taking your cash basis minus that, get a little bit over $9 a bushel. That would be ideal for me at this stage of the game, because I think you're right in what you're kind of leaning towards with South America by forward selling so much. They're clearly going to plant fence row to fence row soybeans this next year. So we're going to have even more competition out of Brazil next year than we did this year. And I think that's where it goes back to how much did China pre-buy? How much have they loaded up extra and hoarded on the demand side that they will then come back and not buy as much? So profitability in soybeans we got very close to, and then the market gave way because of the rains falling and some of the COVID scares. Corn profitability is still quite a ways away at this point, but I kind of feel like corn, like I did last year, Luis. Again, I think the trade is well over a 3 billion bushel carryover by putting us at the price of $3.15 D's corn and going below $3 cash at this price level currently. So I'm going to be patient with the corn, and I know that many clients are still looking at building more bins to store corn on farm for next year, and I think it is a better value of store.
Yeah, and in order for the viewer to understand why in Brazil the price is better than the United States, that's because the currency devaluation, and also because of more demand from China to buy pork and chicken products. So that makes the domestic price in Brazil more profitable than in the United States.
Yeah, and I think the other thing that many people don't realize about Brazil specifically is you buy your inputs in one currency and sell your soybeans in another, and that usually works very much in your favor as well.
Yes. Is there something else would you like to add, Mike?
Well, for the livestock clients out there, we touched on hogs a little bit. I'm still very eager to get feeder cattle and fat cattle hedged because the data is not looking good coming out of July 4th here in the United States. Yelp is a pretty large application that is used by mobile phone users when it comes to restaurants and things like that. And they are expecting now 16,000 U.S. restaurants to close permanently, and another 10,000 are closed what they think is going to be temporarily, but they could close permanently as well if COVID spikes more. So I think our demand base is being eroded at this point, and some schools are now opening in states like Indiana, but states like here in Kansas, they're going past Labor Day. So that institutional demand is not looking good. So I'm real eager to get feeder cattle locked in for downside exposure in the next week or two, and I'm recommending buying corn feed needs all the way to the 1st of December at this price point as well, Luis.
Our friend Mike Zuzolo from Atchison, Kansas. Thank you.
Thanks, Luis. Have a nice week.